All right, Bulls and Bears, BX4 Bull to the bus, back in the building, back with another dose. Let's go ahead and get right into it. It's Monday, September 16th, 2024. We're more than halfway through the month now of September, and so in less than a couple weeks here, we're going to be, about 2 weeks, we're going to be ending the third quarter of 2024, entering the fourth quarter. And in my opinion, the fourth quarter is when it's all going to come unraveled. I think we're going to see some shocking things come to light here. We just had another attempt on the ex-prez's life recently, yesterday, Sunday. And it's going to get more intense. It's going to get more insane. I think we're going to see social unrest. We're going to see shocking things unfold economically, socially, and all of the above. Of course, we're going to focus on the economic side of things, but the economics, financial side of things is survival, right? Who can survive without a roof over your head? And a lot of things we talk about here are going to be, related to housing, your quality of life. I mean, just your ability to not work your whole life away. And more people now than ever are working multiple jobs. Even though we're being told the consumer is strong and resilient, we know it's mostly borrowed money that is being spent right now that's keeping the economy looking like it's, I would say the word growing. It's not really growing, but the way it's being reported, they're saying the economy is still growing, economic growth, right? How many times have we heard that? But the growth is based on borrowed money. I think most of you know that. Let's get into the news. We got Warren Buffett continuing to sell stocks. Now, some people may say, well, you've already talked about that. He's continuing to sell. He's raising more cash now than even before. We talked about that. We're going to get into that. We've got, of course, rate cuts on the horizon. Ask yourself, why do we need rate cuts if the economy was strong? And if the cost of living hasn't come down, why would we need rate cuts? Things are more expensive now than they were last year. But because the rate of increase is slowing, we're told, oh, okay, that's the gauge that inflation is slowing. But if you look back at history, that's typically not the gauge. It's supposed to be a 2% inflation target, and that's average inflation, meaning if you had multiple years above 2%, you need multiple years below 2% to average it out. But they threw that out the window. That's all forgotten now. We're in a whole new financial world right now compared to where we were even a few years ago, but especially compared to where we were back in the 2008 financial crisis, right? We have banks completely unleashed from any sort of reserves. That's supposed to change in October. We've talked about that many times. That's why we're gonna keep a heavy eye on what's happening and what's going to happen in October. And of course, we're going to be here every step of the way, talking about this as these things come out daily if we can. Please make sure you give this a like, get us a little bit of traction if you can here. Let's get going here. Microsoft Gaming to lay off 3% of its entire global workforce, about 650 employees. So is it people are working so many jobs now they don't have time to play video games? Microsoft Gaming, post Activision Blizzard cuts 3% of its global workforce. The Xbox owners' global workforce, a new round of eliminations. Completion of its $69 billion Activision Blizzard acquisition. That's right. They acquired Activision Blizzard. So you let me know down below. Is it AI that's creating all the video games now? Is it a slowdown in consumer demand where people, again, are so far in debt, living paycheck to paycheck, where video games are not on the radar like they used to be because people have to scrape by, right? Half the population living paycheck to paycheck. I mean, please let me know what you think. A couple other things to get into before we get into the Warren Buffett situation here. More talks here about a soft landing. Right, that's all we're hearing about. Soft landing, soft landing. Fed ready to unshackle U.S. economy with soft landing at stake. First interest rate cuts expected on Wednesday, but investors are more focused on what will happen immediately after the announcement. Well, a couple things. If you've looked at previous recessions, if you've lived through them, also, you know that as the economy is actually in recession, not when it's being reported, but when it actually enters recession, which you usually doesn't get reported until 6 months to a year later. When you look back, when they finally admit that a recession is here, you see that the rate cuts actually started when the recession really started. So I would argue that we're already in a economic downturn right now. Is it being reported yet? Of course not. But when you look at all the numbers, when you look at the state of the U.S. consumer, we're several months into it here. in my opinion. So also the yield curve uninverting. If you look back, that's typically something that always happens at the beginning of the recession. All right. So something to keep an eye on, something to think about here. Um, and this is globally, right? The globe is looking at the United States, the entire world looking at the United States, but there have already been other countries cutting interest rates, even while the cost of living is inflated. We'll talk about that here in a few minutes as well. But let's go ahead and look at the world landscape here as far as interest rates. Bring this up here, bring up a bigger chart on this here. And this gives us the G20 countries. And you want to see the highest interest rate here is just sort Turkey, a 50% interest rate. And Argentina, 40%, Russia, 19%. So if you wanted to fight inflation, that's one of the ways you could do it. Is that going to be the entire solution? Of course not. Well, think about if the United States had a 50% interest rate here. Most people wouldn't be able to afford most things because you'd see credit card interest rates, mortgages, auto loans. The rates on those would make your payment so high that no one could afford it. So the prices of those things naturally would come down. Of course, you'd still have the billionaires coming in and buying homes with all the investment firms out there. The hedge funds buying up real estate, the global real estate investors, those companies would still come in and buy with cash, and likely even more so because they're not dependent on interest rates, right? A lot of them have cash. Some of them actually invest with borrowed money. If you look at some of these corporations, some of these big businesses, they are operating in debt, right? So they're using debt to buy up more and more assets, and including real estate. So it's going to be very interesting, if that ever comes here, where we see inflation spike up so high that we see something like a Turkey or Argentina interest rate, which is 40 and 50% over there. Now these that we just looked at, those were the G20 countries. Let's expand it out to the entire world and include some smaller countries here and see what the highest interest rate is. Venezuela, 59%. There you go. Turkey, still 50 in there. Ghana, 29%. So pretty interesting. Now let's talk about inflation. Where does the United States stand and compare to the globe with inflation? Well, look at a chart here. Again, the G20 countries. And this is the inflation rate. We're at about 2.5%. But if you look across the globe, even Russia is higher than us at 9.1. And let's sort this down here. Okay, Argentina, 237%. Turkey, 51%. Russia, 9.1%. That's why you see some of those countries with those ultra high rates, because the inflation is so bad. So for those of you barely scraping to get by here in America, count your blessings, because it could be much worse. You could be suffering under some of this, say Argentina, 200% inflation. And I didn't see Zimbabwe on the list, actually. Anyways, you guys get the picture here. Could be worse. Can you imagine it being worse right now than it is, with more than 50% of people barely scraping by? Savings rate at the all-time low at 2.9%. That's how much money people have left over at the end of the month. So folks, people don't have much longer. So it should be no secret why they need to cut rates, and why we have all these programs in place to help people buy houses and so many other things here. And speaking of things being worse than they're actually being reported, remember last month, I think it was even less than a month ago, the powers that be, the United States statisticians came out and admitted that the United States added 818,000 fewer jobs than previously thought. That was all those backwards revisions that you look back and they give the jobs number, and then the following month they go back and they revise it, but nobody pays attention because now they're talking about the latest jobs number. So almost 1 million jobs, folks, that were reported that didn't actually even happen, right? So pretty mind-blowing that people still, look at these things and actually believe these things. Well, let's get into Warren Buffett. Warren Buffett's been a good indicator of the economy going back decades, right? He typically sells a lot before downturns, and then he comes in and buys stocks and assets for pennies on the dollar. Even went into real estate with the Berkshire Hathaway real estate portion of the Berkshire Hathaway operations here. Warren Buffett once said, waiting for a market crash to buy stocks is like a mortician waiting for an epidemic. Oh my goodness. That's pretty dark. But yeah, so he's selling off more stock here. Just recently sold off more Bank of America stock. So you have to ask yourself, if the banks are just going to be propped up no matter what, liquidity injections to infinity, why would he be selling those stocks off? Well, even though they're going to be propped up and rescued, ultimately, there still will be some volatility when things hit the fan, especially with more bank runs. You notice even when those mid-size and regional banks failed, even the big banks saw big drops in their stock because of the panic, and investors initially panicked. Well, if you look back just like 2008, there was an initial panic, but then more money came in, QE, quantitative easing to infinity, rock bottom interest rates, borrowing more money. And by the way, we're borrowing so much money that the interest on the debt is at $1 trillion per year for this country. Just $1 trillion per year just on the interest. Yet there's people still out there telling me that I'm wrong, that everything's fine, that there's no problems. Oh, we're going to pay this debt off. You really think we're going to pay the debt off? Even if you erased the principal on our debt, but just paid the interest, which there would be no interest if the principal was erased. But even if you just had to pay the $1 million that we're now paying just in interest, we couldn't even pay that off. Or let me give you a better example. If we drop the debt, the national debt, from 35 trillion down to 1 trillion, let's just say that happened, a big haircut, right? Over 90% off. We still couldn't pay that back. Why? Because every dollar that enters the economy is borrowed money. It's borrowed money. So every dollar that's created or put out there, that's thrown at the rescue program, Inflation Reduction Act, all the spending is actually money we don't have. It's money that the United States has to borrow. All right, imagine if you had no savings, that everything you spent was borrowed, everything. That's the United States right there. So pretty insane, but there's people out there still saying that everything's going to be fine. There's nothing to worry about. Why are you reporting doom and gloom when, I think this is just economic reality when you look at it. Is it not correct, though, that every dollar that we spend as a country is borrowed money? Right? If we had the money, why would we have national debt, right? Just think about it, just basics, right? A big stock sale from tight-lipped Berkshire Hathaway executives are saying a lot. Continuing to sell stocks here. Warren Buffett, I can talk here. Warren Buffett just sold another 3.1 billion with a B worth of stock here. And let me give you the numbers here. We talked about Apple before. Last quarter, Buffett sold a massive position in Apple, nearly half of it actually, and that was the biggest stock sale in the history of Berkshire Hathaway. The biggest stock sale in the history of Berkshire Hathaway, accounting to roughly $72 billion. So folks, when Buffett's selling the biggest sale or completing the biggest sale in the history of the company, will that be an eye-opener? I think it should be. He's been selling Bank of America. He sold $3.8 billion of worth of Bank of America between July 17th and August 1st. He sold another $3.1 billion in late August, and just earlier this month, the value of Berkshire's holding has gone from $41 billion at the end of the second quarter down to about $34 billion. Why is he selling Bank of America? Again, if the banks are always going to be propped up no matter what, bailouts to infinity. Well, at last year's shareholder meeting, he expressed concerns about the banking industry. And he said, I'll give you a quote here, quote, "If people think deposits are sticky anymore, they're just living in a different area. It's impossible to predict the banking industry." And basically, he rounded it out by saying that in the digital age, bank runs can happen at the click of a mouse in a matter of seconds because people can just go online and pull out their money. You don't see the bank lines, around the corner like you used to. You still see it in some instances. But for the most part, people are electronic, online, electronic funds, digital transactions, taking their money out. So a lot more volatility, a lot more risk of banks losing capital. But then again, you go back to the reserve requirement. When banks don't have to have capital, many would argue that it doesn't even matter because they can just get someone else at the click of a mouse. And you say the Fed at the click of a mouse to just pump all the money right back in to the bank. So when you have digital money that can be transferred billions of dollars, trillions of dollars at the click of a mouse, can you really predict exactly what's going to happen, right? It all matters, or it all depends on who's behind the mouse, who controls the money. That's why we need to go back to sound money. We need to go back to something that has a limit on how much you can create. In fact, you can't just create it out of thin air if it's tied to, let's say, precious metal or something like that. That's why you see some countries talking about going back to precious metals backed currency and trading. And of course, we have the BRICS nations out there. We're always going to keep you on top of that news here with the BRICS nations. Now, let's go ahead and bring this up here real quick. This is the August budget deficit in the U.S., and this goes back, looks like 12 years. And look at 2024, folks. Not looking so good, is it? Budget deficit this year, and yet we can still see announcements of things like this. Another $700 million in aid for the Ukraine energy grid and more. So we're gonna pump more money out there for this country that's under siege, as many would say. But are we gonna fix things that are just gonna get blown up again? Let's end the war first. Can that happen? We're throwing so much money into the abyss that it's just getting it's like burning money, in my opinion. A lot of other things need to get done first before we just throw money at the problem. But of course, you have special interests getting rich off of all these spending programs and aid packages. Most of you know this. That should be elementary by now. Look at this. This is how far $100 will go in each state. Suppose I can bring it up so you can look at it. In the U.S. Bring up a large one here. Of course, California, about the worst. We see, the yellowish color is the lowest. So $88 out of 100 is what you get in California compared to average. The best states are close to $114 out of $100. So these are, looks like Wisconsin, or actually, no, Wisconsin's not. It's South Dakota, Iowa, okay, Arkansas, Mississippi, and Alabama. Those are the darker states. Kentucky close behind, as you get the most value out of your money in those states. So when you look at the cost of living, inflation, of course, I'm in the worst state you can be in, California. For those newer viewers, I've spoken here many times why I haven't moved out of California. And it has to do with family, commitments, obligations. I've got elderly family members I'm basically taking care of. And when you have kids that are in school, it's not easy to just pick up and pack up and leave, as many of you might know if you have family or responsibilities. People that don't have responsibility in families, I mean, if I was a single guy, with no obligation or commitments or tie downs, I might have moved to, where would I move to? Texas? I don't know. It's pretty hot there, and it's a lot of disasters, a lot of tornadoes and hurricanes on the coast, right? So I might go to Tennessee, but then you have tornadoes. I don't know where I'd go. I'm all scattered on that front here. I don't really give it a lot of thought, but a lot of people have left California. A lot of friends of mine. This year is going fast, folks. We're already halfway through the last month of the third quarter. We're going to be entering the fourth quarter here. And as a good friend of mine once said about time and how fast it goes in life in general, the closer you get to the end, talking about life, the closer you get to the end, the faster it goes. Oh, let me rephrase that. Got to do my friend justice on this. He's no longer with us. Rest in peace. Kenneth, my good buddy. He said, life is like a roll of toilet paper. The closer you get to the end, the faster it goes. All right. We'll close it out, folks. Hope you're doing well. I wish I had more great news to report to you here. And I've talked about this for years. Maybe I'll start another channel where I'll talk about just goofy stuff like maybe entertainment. There's a whole dark side of that too, but maybe entertainment, maybe music, who knows. Got a couple things I'm thinking about. But anyways, hope you guys are well. Please make sure you are subscribed. Very intense times we're headed into. It may not seem like it on the surface, but there's a lot of things boiling underneath the surface that are going to come to the surface, and they're going to be visible. And a lot of it's, I have to pick my words carefully here, a lot of it is having to do with many well-known people and many people in positions of power and authority, from the entertainment world to politicians. A lot of people are going to be exposed as doing some very bad things. That's all I can say. You're going to be shocked, folks. And could it bring the markets down? Could it bring the entire financial system down? Yes. If not, there's a lot of other black swans out there just waiting to come down. So be ready, keep prepared, keep stacking, as I always say. We'll talk to everybody very soon. What did you think about today's report? The states, how fast $100 goes in each state. Back to the beginning, what we talked about, Warren Buffett still selling his stocks, right? Biggest sales we've ever seen out of Berkshire Hathaway and company there. Layoffs in the gaming industry, what does that tell you? The interest rates in countries like Venezuela, nearly 60% to fight inflation, but yet here we're cutting rates, even though the cost of living is pounding about half of the population, folks. Let me know what you think about all this down below. Keep stacking, everybody. Bye for now. Peace.